Hello traders, it's time for the new weekly Forex forecast for the trading week beginning on 19th of August. Now in the upcoming week, we have only two major announcements. The number one announcement is from Europe related to their inflation report. So we have CPI report coming out, and the biggest announcement is scheduled for Friday. On Friday, Mr. Jerome Powell is going to speak, and maybe he's going to give a hint that if US is ready to drop the rates in September or not. So by the time we get to listen to his announcement on Friday, let's prepare ourselves on the technical chart basis to trade in the upcoming week. So let's begin the technical analysis, and the first instrument I'm going to cover is dollar index. So I'll make it very short for dollar index. Technically, dollar index remains under pressure. It is bearish. So quickly going through the weekly chart here for dollar index, here we get to see that the market is 100% bearish. We see good bearish candle. So we got the weekly close lower than the rising trend line. So here the rising trend line is representing the support. Now the support is breached, it's broken on the weekly closing basis. And it is anticipated that dollar index should continue lower because everyone is expecting a rate cut in the upcoming monetary announcement to be scheduled on, I don't know what is exact date, to be scheduled in September. Now here we go to daily chart, and I'm just turning my chart into a line chart. Now on the basis of daily chart for dollar index, I'm going to apply Fib extension in the downward direction. So here we go. We start from the highest, the starting highest point of the triangular formation, connecting to the lowest, and again joining to the lower high. Now since it's bearish, so let's keep the tool red in color. So here it has reached exactly to Fib extension 61.8. This is the current price, and it is expected to drop to 100, Fib extension 100. So psychological mark, dollar index should reach 100 in the coming weeks. Now the next thing is, now one more thing which I forgot to announce in my intro is, now a couple of weeks ago the global stock market was under tremendous pressure, and the market sentiments, they immediately shifted from greed to fear. So most of the institutional players, they diverted their funds towards the safer assets like JPY, CHF and gold. Gold is still the favorite of the market, but in the current week, we have seen that market has again shifted towards riskier asset class, and stock markets have started bouncing up globally. Due to which we have found that the Pacific currencies have again started getting the interest of buyers. So AUD remains stronger in all respects. So on the basis of comparison between Australian dollar and New Zealand dollar, definitely Australian dollar looks much brighter, much stronger. So here we are on the weekly chart for AUD versus NZD, and I'm going to start the technical analysis from the lowest point here. I need to apply Fib extension in the upward direction. So I'm connecting from the lowest point A, connecting to B, the first high, and then joining with C, the higher low formed. Now let's keep the extension tool green in color. After that, we also got the next bullish leg up, A, B, and C, second ABC pattern. So I'm going to apply a Fib extension one more time here. Starting from the next higher low, connecting to the higher high formed, and the next higher low, a new ABC pattern here. Now, if you notice, again, we need to differentiate the colors of the Fib extension line. The second one, I'm going to change it to blue in color. So here we get the magnet zone. So this is the weekly magnet zone, sorry. So here we got the weekly magnet zone. So Australian dollar versus New Zealand dollar was expected to reach the price level of 1.11 to 1.1161, and it completed the setup. Now I'm just turning my chart from a line chart to candles chart. Now after completing the setup, after touching the magnet zone, a price drop was anticipated, and we got the drop here. So we got higher high formation, high and next high formation, and we get some signs of divergence here based on histogram but not on MACD line. So when we have only one parameter, one component on MACD showing divergence but not the second one, it means a short-term pullback is anticipated, and then finally the market will continue in the same direction, which means a short-term pullback was anticipated and we got the drop here, and again the market starts rising. Now it will be more visible, it will be more evident on the basis of higher low pattern. So here we have low, next turning point higher low, next turning point higher low, and the next turning point higher low, followed by the next turning point higher low. So on the rising lows basis, the chart pattern is clearly bullish here, with some sort of loss of momentum on MACD histogram. Let's move to daily chart here. Now, on the basis of daily chart, we can notice that we have higher high pattern on the daily chart in conjunction with higher low pattern. So as per the price pattern, the trend is still bullish, and after this major rise towards the resistance zone, which was calculated on the basis of magnet created on fib extensions, pullback was anticipated, which is now completed, and I'm going to check the fib retracement level starting from this level, that's A, connecting to B, and we will get exact retracement percentage here. So I'm going to apply a fib retracement starting from A to B. Now textbook condition, market dropped exactly towards fib retracement 61.8, and the buyers, they come back in the market forming higher high. So this is the new higher high formed, and higher low is also formed. So everything looks in favor of buyers in the instrument Australian dollar versus New Zealand dollar. This is the rising trend line. So in case our plan fails, then the sellers should break below the rising trend line. So this will be the invalidation of our bullish plan. Now I'm going to the next lower time frame, and I'm also going to apply the latest fib extension on the leg on which we have counted retracement A, B, and C. So this will help us to identify the new target levels. I'll connect from A to B and B to C here, and I'm going to change the color to golden here. So the 61.8 fib extension is 1.1131. So this is the next upcoming target, followed by 1.1291, and in the longer run again we have a new magnet zone which is being formed around 1.15. So this is the plan for AUD versus New Zealand dollar. I need to realign the chart here, and let's go to the next lower time frame, that is 4-hourly chart. Now on the basis of 4-hourly chart, if you notice, the chart is forming higher low in conjunction with higher highs, and I do not see any bearish divergence here. So which means if the buyers, they successfully continue with higher low formation here and without dropping lower than the latest 4-hourly rising trend line, then the buyers are safe, and it should continue for the first target around 1.1131. In extension, in the longer run, the next extension target would be 1.15. So we are definitely going to face some resistance around 1.1161. The current price is 1.1010. So there is a good chance, there is a good probability to capture the upcoming 120 pips in this currency pair. Now I'll be applying a new trend line here, joining the latest higher lows on the 4-hourly chart. So on the 4-hourly chart basis, if we get a drop below the latest rising trend line, take it as an invalidation on the lower time frame. For the longer run, the sellers should take the price lower than the bigger trend line. Now let's move to the next lower time frame, that is 1H. Now here on the 1-hourly chart basis, we have again bullish pattern. We got the bullish divergence here at the bottom, lower low formation with bullish divergence, breakout structure completed, higher low formation done, and higher highs also completed. Now we have some bearish divergence which might bring short-term correction here. Once we get back to the rising trend line, the buyers should continue. So only on the short term basis, 1 hourly or 15-minute chart basis, we can find some correction. So here we have again rising highs, higher highs with bearish divergence, breakout structure in the bearish direction, which will bring some short term correction on the chart. Finally reaching to the rising trend line or closer to the rising trend line, and we should switch to buying. So the plan is, if you want to capture in the very short run, then the plan is bearish based on 1 hourly and 15-minute chart, but on the basis of higher time frames, the trend remains bullish and the plan remains to buy on the dips. The next instrument I'm going to talk about is Euro versus Australian dollar. Now, as I've said that the Pacific currencies are getting stronger, especially Australian dollar. Euro in comparison to Australian dollar remains weaker. It looks weaker at the moment. So here I'm going to apply the weekly chart. On the basis of weekly chart, I'm going to talk about the trend which started from the lowest point on the weekly chart. So this is the starting point on the weekly chart. I'm going to mark the first fib extension on the first ABC pattern. So here we have the lowest point. I'm connecting to the highest point and joining with the higher low, and the market reached towards fib extension 100%. The next fib extension to be applied from the starting point, again next A, B, C on the weekly chart, and we have reached, I need to change the color here, and we have reached an important area of resistance, which is fib extension 61.8. So currently the weekly candle has just closed around, or in fact it has closed slightly lower than FE 0.618 with the price level of 1.6544, and the current price is 1.6526, so slightly lower. And I can see on the basis of weekly candle, we have a lot of sellers in the previous candle, and even the latest weekly candle is also 100% bearish. Now I'm switching to daily chart here, and on the basis of daily chart, the latest turning point comes here. This is the bullish turning point. We have higher high formation here, but the buyers, they are facing resistance around the previous high. So I'm going to mark a resistance here on the top with the next lower high. So market reached to an important area of resistance, got rejected, sellers took the control, and on the daily chart or weekly chart basis, we got a close lower than FE 0.618. The price point is 1.6544 or 645. And the candle pattern is also bearish here. I'm going to apply fib retracement on the latest rising leg here. So I'll start from the turning point, the bullish turning point. I'll join to the highest point, and we are expecting a drop at least towards 61.8. So this is the level in sight. Now moving to 4H. Now here on the 4 hourly chart, we have a high followed by lower highs, and I'm going to explain the short time frame extension bearish. So this is the drop coming from the highest point on 4 hourly chart. So this is the control of sellers creating a drop here, a tiny push by the buyers, so we can call it as a very short retracement, and I'm going to apply fib extension in the downward direction on the 4 hourly chart, starting from the highest point and joining with lower high. Now the first target is FE 0.618 followed by 100%. If we notice that on the basis of Fibonacci retracement, if the market drops towards 0.618, it is very close to our target on the basis of 61 fib retracement. So it's a confluence here. So it is easily anticipated that the sellers, just give me a second, it's creating some confusion here on the levels. Yes, so it is highly anticipated that the sellers, they are going to take the price towards the price level of 1.635 1.6349 or 1.6350. So this is the target in sight for the sellers. Now I'm moving to 1 hourly chart. Now on the basis of 1 hourly chart, there is slight loss of momentum in the bearish direction because I can foresee some bullish divergence being built up here. So we can expect some short-term rise, but until the market remains lower than this level, this is the latest lower high or the turning point, which is printed on 4 hourly chart, the sellers are safe. So until we get a closure above this level, I'm going to mark a line here to get the exact price level. So let's mark a horizontal ray. So the green line, so 1.6707 is the invalidation level for the selling plan. So until price remains below 1.6707, the target in sight is 1.6350. The box, the red box which I've drawn here at the lower end. Now let's move to 15 minutes. On 15 minutes, we can see there is a high probability of some pullback after this massive drop. We can expect 50 or 61% retracement or maybe slightly higher, and then continuation in the downward direction. So in the upcoming week, my plan is to look for selling opportunity only when it comes to euro versus Australian dollar. So any rise should be taken as sell opportunity for euro AUD. Now here I can also explain on 15 minutes that we got higher high formation with bearish divergence, we got the break of structure. So this is the completion of first bearish cycle with a pullback. So we have applied fib extension in the downward direction and we have derived the bearish targets. Now I'm moving to the next instrument, the next currency pair, which is pound versus US dollar. Now recently we have seen that dollar is getting weaker and pound has been the second best performer in the currency market. So the best performer in the last week was, I think, Australian dollar. I need to reconfirm here. So I'm going to market milk currency strength meter. Now here we go, and on the weekly basis, yes, the best performer was Australian dollar and the second best performer in the currency market was pound. So pound still remains favorite, and here we go back on the chart of GBP versus USD, going back to weekly chart. Now on the basis of weekly chart, I'm going to quickly run through the technical setup here. So the bearish trend started from this level. It's a huge drop and we got some lower highs here. We also got bullish divergence towards the end on the basis of histogram. The breakout structure happened in the bullish direction, and now the market is continuously printing higher lows, higher lows, higher lows, and it's also printing higher highs here. There is no divergence on MACD currently, so everything remains in favor of buyers. I'm going to apply fib extension starting from the lowest point on the weekly chart, connecting to the highest point and joining with the higher low which formed after massive retracement. So on the basis of fib extension on the weekly time frame, the first extension level target is 1.35, which is also a psychological number, 1.35. Currently the price is 1.2939. So there is a high probability that the bulls of pound dollar, they might take this currency pair to 1.35 in the upcoming weeks and months. So this is going to be our weekly target. Now I'm going to the next extension cycle, which I can plot on the higher low, high, and the new higher low. Let's change the color to green here. So here we get the duplication zone. So give me a second here. So here we get the duplication zone. So we have 161 coming together with 0.618. So this forms the magnet zone. So we can exactly highlight the area with the help of a box here. So this is going to be the target in the upcoming weeks and months for pound dollar. The first target is also visible around 1.3116 on the basis of weekly fib extension in the bullish direction. Now coming to the daily chart, I'm going to plot a rising trend line here. So the buyers remain safe until the market remains above this rising trend line. We also have the next rising trend line here. So there was a false breakout in the bearish direction, but the buyers, they have quickly reversed the situation and it turned out to be a false breakout. Now, until price remains higher than 0.618, which is also an important fib extension support level now. So 1.2826 is the major support level to look for. If we get any pullback, this level should serve as support, and the next resistance is at 1.3116. No bearish divergence on MACD, so no problem for the buyers. So the buyers' momentum remain intact. Now going on 4-hourly chart, everything looks bullish here. We got the bullish divergence here on the 4-hourly chart. Lower lows formed with bullish divergence. It's a double bullish divergence. Breakout structure happened. Higher lows being formed all over on multiple time frames. The momentum is extremely bullish here. The buyers, they are in full control. No signs of slowdown. No bearish divergence on the chart. Moving to 1H. Again, no divergence in place, no bearish divergence. We got the double bottom here. Double bottom scenario with bullish divergence on 1-hourly chart and 1-hourly breakout structure. Higher lows being formed all around. So everything looks good. So if you want to join the buyers on the lower time frame basis, wait for the pullback, maybe around this area, which is around 1.2850. So try to capture the buy setup around 1.2850 with the stop loss below 1.2800, and the first target should be 1.3116 followed by 1.35 if you are planning to hold it on the longer term basis. But the plan is to buy on the dips. No signs of selling for GBPUSD. Even on 15 minutes, I can see only higher highs are being formed in conjunction with MACD lines and MACD histogram. So no bearish divergence coming in play even on 15 minutes time frame. Everything looks in favor of buyers. The next instrument we are going to talk is UK 100. So I've taken the stock index from UK market this time instead of US market. So we have been covering Nasdaq for a couple of weeks. Now this time I have switched to UK 100. As I've told you that most of the global stock markets, they have turned to bullish again. The institutional traders have decided to go bullish with the stock markets because everyone is anticipating a rate cut in the upcoming months, which is bringing weakness in the dollar, which is a good sign, which is a positive fundamental factor for the stock markets around the world. Now here I'm going to explain the daily chart. Instead, we should start from the weekly chart. So what I've done here, I've seen the setup here. The setup is on the weekly chart is 100% bullish. Low, higher low, higher low. Again, this is the turning point. So I have marked fib extension from this turning point. I've connected to the highest point after this turning point. Then I've connected to the lowest point here. So it has given us some important levels. So on the basis of the first fib extension plotted, I think it's better if I clean the chart. So here I'm going to mark again. So I'm starting from this turning point on the weekly chart. Okay, this is the low of 2022, joining to the highest point and connecting with the higher low. So currently it has reached 8415 fib extension 100%, an important fib resistance. I'm joining here the higher lows. So this is the rising trend line, and I'm going to join the next fib extension now. So we have connected to this lowest point. I'm going to use the lowest point as the next first point, that is point A, joining the high, point B, and connecting with the new higher low, and I need to change the color here. So on the basis of the second fib extension, the next important level is at 8600. So the price has already reached extension 100%, the bigger cycle. The smaller cycle is at FE200. In fact, it is slightly higher than FE200. So the next upcoming target is 8600. Currently, we are at 8322. And the exact magnet zone is formed at 9135. So 9135 is the long-term target for UK 100. The chart pattern is 100% bullish. we have higher lows and we have higher highs with no bearish divergence. So no signs of exhaustion for the buyers. Moving down to daily chart now. Now on the basis of daily chart, we got the correction here after reaching Fib extension 100%. So this is the lower high which was formed, and we also got some lower lows, but it also formed bullish divergence here. So I can see lower lows with bullish divergence. Now the breakout structure, no, the highest point is here. So the breakout structure is still pending in the bullish direction. So there might be a short-term pullback at the opening of the new week, because currently the price is sitting at the double top resistance level. Coming down to lower time frame, that is 4 hourly. On the 4 hourly chart, I do not see a strong bearish divergence. I can see only continuing type bearish divergence, which means there should be a short-term drop, but the short-term drop should be taken as an opportunity to buy. So here I'm going to connect the rising trend line on the lowest time frame, that is 4 hourly chart now. On the basis of 4 hourly chart, I'm going to connect the rising lows. And by joining the rising lows, I can see that the short-term bearish plan gets activated with the retest of the same high. So it is to be taken as a double top. Moving down to 1 hourly chart. Now on the 1 hourly chart, the picture is not matching with 4 hourly. Turning back to 4 hourly chart. So here I'm going to join another trend line. So because the 4 hourly trend line is not fitting well on 1 hourly chart, so I need to apply a new rising trend line. Now on the basis of 1 hourly rising trend line, the trend line is still intact. It's not been broken. So if we see pullback at the opening of the new week, we might get pullback towards 82.95, which is an important Fib support level, followed by the rising trend line. So anything between 82.95 to 82.40, 82.50 should be taken as an entry level, and the next target in sight should be 84.15. So the long-term plan is clearly bullish. Only in the short run we might get some pullback. So anything close to 82.50, 82.40 should be taken as an opportunity to buy. And the next instrument I'm going to talk about is silver. So this time I'm going to cover multi-time frame technical analysis of silver instead of gold, because I've repeatedly said that gold remains bullish. My next target is 2570 to 2580, could be close to 2600 as well, and the chart pattern is technically bullish. But this time I wanted to cover multi-time frame technical setup of silver instead of gold. So here I'm going to start my analysis on the weekly frame. Now it all starts from the lowest point on the weekly frame, which was formed during COVID 2020. So this is the COVID low, this is the high post-COVID, and this is the higher low. So I'm going to apply Fib extension connecting the lowest point of the COVID with the post-COVID high, joining with the higher low. So silver has crossed the important resistance at 27.82. On the weekly frame basis, the next important resistance is at 33.86. I'm going to check the price pattern here. So we have low, high and higher low, which turns to be the turning point. And then we have another higher low and next higher low, and followed by new higher lows in conjunction with higher highs here. And I do not see any bearish divergence. We have higher high formation on MACD lines. We have higher high formation on MACD histogram. I just need to reset. Yeah, so alignment is done. I'm gonna zoom in. So we do not see any signs of bearish divergence here. I can also apply a rising trend line on the weekly. So as far as this rising trend line is not breached, the plan remains bullish. As far as we do not see bearish divergence or lower low formation, the plan remains bullish. Now moving to daily chart. Now here on the daily chart, the price action is quite bullish. So we got bullish push, corrective price action, next bullish push, corrective price action, Now we have buyers, small sellers, higher lows being formed. Next set of buyers, small sellers, again massive rise, and the sellers could not breach this low. I'm going to mark it on the daily price basis until price remains higher than 26.24. There is no problem for the buyers. I'm going to apply fib retracement starting from the lowest point connecting with the latest lowest point connecting on the rising trend line to the highest point. Now, on the basis of Fibonacci retracement, we also got the retracement towards 50% mark. Now, after touching the 50% mark retracement area, I can see the market got the bullish divergence here. We got the lower lows with bullish divergence. We are waiting for the break above the structure level. So break of structure will be completed at the opening of the new week. We get higher lows all around, starting from weekly to daily to 4-hourly chart. No loss of momentum. In fact, the bullish momentum looks good here. So everything remains in favor of buyers. If you want to talk about the targets, I need to go back to the daily chart, and I'm going to apply fib extension one more time, starting from the lowest point, connecting nearest to the rising trend line, connecting to the high and joining the higher low. So the next target is 32.77. So currently the price is around $29 mark. Until it remains higher than 25.87, everything looks good for the buyer. So let's calculate the risk and reward here. Let's say I'm going to get in at the current market price with the stop loss around 26 and the first target at 32.77. So the risk reward is 1.2, which is slightly lower than our expectation. We do not get into a trade if we do not get at least 1.5. So if we target the bigger extension level, 33.86, then we get around 1.6, which is healthy. And if you target the fib extension 100% on the latest price pattern, then the risk and reward becomes 2.4, which is amazing. So until we get a closure below $26 mark, everything remains bullish for silver. Again, I need to realign the chart. I need to move into the 1-hourly system here, 1-hourly setup. I'm just going to delete the risk and reward tool here. And the setup I want to discuss is 100% bullish. So we got low and lower low with bullish divergence on the chart. So here we have lower low formation with bullish divergence on histogram and MACD lines. The breakout structure happened and higher lows are formed. Even higher highs are intact and we do not have any signs of divergence, no bearish divergence. So the first resistance is expected around the previous high, it's around 29.07. And our major target is 31 on the basis of daily chart. 31.1 followed by 32.77. So we have taken the extension targets on the higher time frame. So guys, this is the plan for the upcoming week. I'm bullish for gold and silver. I'm bullish for the stock market now. Dollar remains weak. Pound looks good. So I hope my multi-time frame analysis of various instruments adds some value to your trading plan. There is a request, if you find my analysis valuable, I would request you to hit the like button and share my videos with more and more traders so that they get benefited from the analysis. All right, take care and have a profitable trading week ahead. Bye-bye.